The presentation today, I always come with about, we have about 30 minutes, and we're going to do about 15 minutes of questions. I always come with several hours of material. We won't go through it all, but that's okay, because we'll emphasize the things of most interest to this audience. So I've got some history, I've got some economics, I've got some science, I've got some really national security or geopolitical issues to talk about, as well as look forward into the future of the international monetary system, which affects all of us. So it doesn't matter what region you're working in, what currency you're working in, what area of business you're working in. If the international monetary system itself is a source of systemic risk, then it affects all of us, and that's really my specialty. And of course, it comes from Federal Reserve policy, the U.S. Central Bank. Approximately 60% of all global reserves are in U.S. dollars. Vast majority of that in U.S. Treasury securities, but not all of it. You could have dollar-denominated securities of various types, but total reserves around the world are 60% in U.S. dollars. So obviously, the central bank that issues U.S. dollars, and anything that affects the U.S. dollar affects emerging markets and countries around the world and investment opportunities around the world. So that's really going to be our focus today. I wanted to start with talking about the geopolitics. In 2009, I worked with the U.S. Department of Defense, the Pentagon, devising the first ever financial war game. Pentagon, of course, has done war games forever, but this was the first one where you could not use any so-called kinetic weapons, so things that would shoot or explode. The only weapons were financial, stocks, bonds, derivatives, currencies, commodities, etc. We played it over a couple days at a top secret weapons laboratory outside of Washington. I was one of the designers and the facilitators. I also got to play on one of the teams. And the purpose of this is to understand financial threats. Now this was 2009. One of the scenarios we advanced at the war game was that Russia and China would acquire gold. Of course, they have quite a bit of gold. They would deposit it in a Swiss vault and have a London bank that would issue a new currency backed by the gold in Switzerland. And thereafter, Russian natural resource exports and Chinese manufactured goods would only be priced in this new currency. And obviously it was a way to abandon the U.S. dollar, break out of the hegemony of the U.S. dollar payment system and the dollar as well as a reserve currency. And countries could get these currencies by trading with them. You could earn them, or you could deposit your own gold and get currency from the bank in London, and then proceed with this new monetary standard. It's fair to say we encountered a lot of skepticism from our colleagues. We had people there from not just the uniformed military, the intelligence community, the Treasury, the Federal Reserve, think tanks, universities, people from Wall Street. So it was a pretty eclectic group. There was some sort of derision. People laughed in our faces and said, "Don't you know, gold has no place in the monetary system. It's antiquated. Why are you wasting our time with this?" Well, since then, since we did this in 2009, so 5 years ago, Russia has increased its gold reserves by 70%. China has increased its gold reserves several 100%, 200% or 300%. No one knows the exact number because they're non-transparent about it. We see significant developments elsewhere in the world. I'll talk about those in a minute. But the point is the world is, in fact, moving in the direction that we advised the Pentagon at the time. The dollar's demise has not come about yet, but there's so many straws in the wind, so many trends in that direction. That's probably the biggest economic development in the world, and one that we all need to focus on. When I got back from the financial war game after 2 days down in Maryland, I said to my wife, I have good news and bad news. The good news is my team won. The bad news is I played China. So again, maybe the shape of things to come. When I talk about threats to the dollar, and these are geopolitical threats. But if you think of it as a Venn diagram, imagine one big circle is the world of national security, geopolitics, diplomacy, intelligence, and military affairs. And another big circle is the world of global capital markets, stocks, bonds, derivatives, FX, commodities, etc. Imagine where those two circles converge in a classic Venn diagram. That convergence is what we're talking about here with the geopolitical threats to global capital markets. And in particular, there are a couple that are front and center. Russia is very much in the news these days, and we all know why, because of their invasion of Crimea. Crimea is effectively part of Russia. It's interesting, one of the first things the Russians did when they took over Crimea was they introduced the ruble as the currency. So if you go to Crimea today, you'll be getting rubles out of the banks and ATMs, and that's what you're spending. So a little facet of currency wars. But the United States is obviously not going to have a military response. No one in the U.S., really around the world, left, right, or center, thinks that the U.S. or NATO should have a military response to what's going on in Ukraine right now. But the U.S. didn't want to be seen to be doing nothing, so we immediately announced economic sanctions, which is a form of financial warfare. Now, what was interesting about that is these sanctions are practically meaningless. And I've been telling, some investors are nervous about this. I say, well, I think I can assure you that these sanctions are not going to go very far. In fact, to the extent that Russian stocks and the currency went down, if you're interested in investing in Russia, there's a good entry point there because that will reverse itself. Why are U.S. sanctions so tame? I mean, it literally amounts to a few bureaucrats and oligarchs not being able to go to the Super Bowl next year. Maybe their credit card doesn't work when they get off the plane in Geneva, but that's about the extent of it. The reason is that Russia has an enormous capacity to strike back